Alright guys, just back with another tape reading session. Alright, so starting with this level here, right, we all should remember that this level is responding to the fair value gap, and I'll try to mark it out right here. But this level is responding to this weekly fair value gap right here, right? And as soon as price reach that fair value gap, we see the counterweight rejection, and then the next week, right, we see price show intention to drive higher. So there's a few things that stand out about price action right now that could lead us to what our premises for the week should have been, right? So if we start with the idea that we want to first identify what the current dealing range is. So if we look here, right, and a dealing range is defined by buy side and sell side liquidity, of both sides of the market being swept, right? So here's the dealing range high because we have a buy side liquidity sweep here. And then down here, right, there's a sell side liquidity sweep to the very far left, but also this is a weekly low. And there's a sell side sweep of that particular weekly low, right? So the dealing range is from this high to this low, right? If we measure that high to that low for optimal trade entry purposes, what we'll find is that this level, or this level rather, right? The weekly fair value gap, or the premium of the weekly fair value gap. I'm sorry, why did I have the fair value gap premium of this weekly fair value gap aligns perfectly with 62% of the range. And then also if we measure the from here to here, we'll see that price has reached 50%, or the 50% mark of the overall fair value gap, right? So we know, just like the same way that price treats every other fair value gap, or the mean threshold of the fair value gap, right, that can cause price or allow price to have an inverse reaction, right? And so in this case, we would expect price to seek discounted objectives, right? So when we push to a daily and we define that discounted objective, right, ultimately what we should be looking at is this particular area here, right? This would be the first discounted objective. This is that fair value gap, right? Sell side liquidity below this daily low. And if we play this out, we see this high, right, engages with the daily fair value gap here, right? So once buy side liquidity is taken here, this becomes the dealing range inside of the overall weekly dealing range. Right, that high is taken. Buy side liquidity collected. Now we can seek sell side liquidity and discounted objectives, right? In this case, the discounted objective is this daily fair value gap. Okay, so this is Friday's trading, and then we push into Monday. Let's try this on a 15-minute. Okay. All right. So not a lot of, not the best price action on EU on Monday, but in terms of how would we enter this market, on this particular day. What the overall context is for these entries, right? If you're and this happens, that buy happens in the London session. We literally have the Asian range low swept. Price leaves behind equal lows with these lows here. So we can expect those to be attacked later on. But what you have here is this would be your market structural shift, right? Once that is taken, and here's a series of down closed candles. There's an imbalance inside of that range. The imbalance is from here to this candle here. So entries, and this is pretty steep, but entries typically would come here, or if the fair value gap is pretty much extended in range, then we can go from that candle to this candle's high, and we could enter at the 50% mark, right? You don't want to be right on the 50% and just make it make sense. Of course, in this case, we have 0-200 as a whole number, and we see price tapping right at 0-200, right? So in terms of stops, to be safe, you should go under that low, and then as a draw on liquidity, you should at least be attacking this high. Bingo, right? So that's about a 1 to 2, and then price pushes into New York session. Get a retracement, a sweep of that high, and I'm not necessarily seeing anything promising in price that would have, forced me to take interest on this day. This is Monday. On this day, I was more focused on S&P 500 because the price action wasn't so clear on EU for this particular day. Right, it's not a lot to play off of. Of course, if I'm only trading the New York session, there just wasn't a lot to play off of in this particular area, at least for this sake. I do believe once we push to this area, if we come down to a lower time frame, we can see if there is anything that might have stood out here, which I don't think. This is filled. Okay. All right. So, all right. Here's what we have to understand about this, right? So here's buy side liquidity taken. Okay. The buy side liquidity, we know that price should want to reprice to sell side, right? Once this is taken, where's the only sell side liquidity? Here. So this would be the ultimate objective for price. Okay. Now, once that is taken, it leaves behind a small fair value gap right here. Okay. Right at 930. Price pushes up and it fills that entire fair value gap. Okay. This series of candles right here would be the bearish order block. Right? What's inside of that series of candles is this fair value gap is created. Here's the fair value gap, right? There's imbalance inside of this of this range of candles, right? So what you could do in this particular case, and you guys just have to trust this, right? You could take entries from here with stops above here, right? Because price has still not met the sell side objective. Right, taps into this area at 930. Once we clear that, the low of that candle, it solidifies this as the true order block, and we would attack this sell side liquidity here. Right, that's the 1 to 3 trading scenario. All of this is just time distortion. Right, this is just price playing around before. And you see this expansion happens in that 10:30 window. This is at 9:30 equities market open, and then we get the expansion down, right? So I'm not saying that if I was watching this pair, I would have engaged with this, but to make it make sense and to find reason behind every single move, this would literally be the reason, right? It starts with this buy side liquidity sweep, We understand that buy side is going to reprice the sell side. If there's any fair value gaps in here, then of course price would also reach those fair value gaps. But buy side taken, price needs to reprice to sell side. All of this is just time distortion. Right, they're building and engineering liquidity for the downward move all in here. Here's that true order block that takes these highs, and rebalances this range. And understand, once we, like I've been talking about, advanced market structure, once price completely rebalances an area or a range, right, then what you should anticipate is a failure swing, right? So if we're anticipating a failure swing, because this becomes the intermediate term high, it goes back to our teachings. When I teach all of you guys what an institutional swing high or institutional swing point looks like, you have a high, higher high, and a lower high, right? And then the next bar should expand lower, right? Here's that high, higher high, right? This higher high is our intermediate term high. Why? Because it completely rebalanced this range in here, right? So once we have the intermediate term high form, what we expect to the right of that intermediate term high is a short term high to form, right? Which comes by way of a failure swing. So once again, once we have an intermediate term high, which is defined by a high that completely balances an area or range, what we anticipate is for a failure swing to form, and that failure swing is our short-term high, which creates the overall institutional swing point, right? So that is one way that we apply a narrative and context behind a trading idea. But anyways, right, for this particular day, here is a nice 1 to 5, not a 1 to 5, 1 to 2, and then here is a 1 to 3 trading scenario. Okay, we push beyond this day. I think we want to say price expands. And this is that London close time frame. And if you're trading this, and if we see price sweep here, completely rebalances, same idea, right? We expect a failure swing, right? The failure swing is relative to this low. So here is this area here, balanced completely, right? Once price balances it, what we expect is a failure swing. So to make sense of this entire area, what we have to see is order flow become established, right? Order flow is established right here. Here's an order block that forms, right? Remember, the key is seeing an imbalance forming inside of it. So here's the imbalance here. Once price clears that high, and honestly it would be the high of this candle. Once price clears that high, right, it solidifies this as an OB, and then what you see is price come back, optimal trade entry. Right to 62%, right to this fair value gap. So you would enter here, stops would go here, and then I would attack, possibly that high where you could come to 27%. I'm not exactly sure where price ran to on this particular day. So I think, we fell just short of 62%, but we did make equal highs here. And at this point, it's 2 o'clock. Day is over with. Do they run those highs? Alright, let's fast forward. So just remember the key behind that trade was that we took sell side liquidity, right? Sell side should reprice to buy side, right? Now that buy side liquidity is taken, okay? So now here's the range. Here is the range balanced completely. Let's come down to a 5-minute chart. And the 3-minute maybe. Not yet. Okay. Alright, let's stay with the 5-minute. Okay. Alright. Balance completely. What you should expect is a failure swing. Here's our failure swing, right? So remember, you're going to keep nailing and drilling this advanced market structure because this helps build narrative behind our trades. All right. So once this area is, tapped into, we see the failure swing and then we see the true OB form right here, right? So as soon as price clears the low of this candle, right? Here's our true order block. And we should be able to find fair value gaps inside of this range. So the fair value gap in this case would be here. And let's see if price trades back up into it. All right, so we fell just short. Here, okay. So this here would also be the true order block, right? Because inside of this area, inside of this whole area, right, there's a fair value gap and price just pushes right into this particular fair value gap here. So if you wanted to trade this, right, and understand, guys, you could interpret these, what I'm saying, different, but the overall rules and the foundation of what I'm saying remains the same in terms of how you should go about seeing this stuff. So if you were to see it like this and you were to say here, this is the true order block, right? There is fair value gaps inside of this area, right? So that solidifies this. Then this becomes, if you understand that this is the point of failure of the price swing. So price, right, should come back to the neckline of this particular area, right? Remember, that's how we trade our failed price swings. So you have a high form, price fails to run back above that high. Once you get the breakdown, right, this area here, right, you're literally just trading whatever imbalances lie inside of this price leg that was strong enough to break the neckline of this particular area here, right? So looking back at the chart, here's the true order block, failure swing that encompasses, or the order block encompasses the failure swing, and then you're trading the imbalance inside of it. And what's key about this is the Asia midline, right? We have buy side liquidity engineer here. Buy side liquidity there, right? Fair value gap, price trades back into the fair value gap. Asian midline, right? In Asian midline, understand that Asian midline is, you'll find sensitivity around that particular level, just as we do with true day open, but it's not as strong as the true day opening price. But what we're getting is price, right? We're finding shorts above the true day opening price, right? So once that happens, then we can become short sellers at that particular area, and then we see price drop off. You could also take trades from this here. Let's come down to a 3-minute to see if it gives us a better picture. All right, same idea. True order block form. Once price runs below this low, right, it is solidified as an order block. What do you do next? You find the fair value gap. Price trades back inside of the fair value gap. And what is the overall context behind this trade is that we're coming off of a failure swing of a completely balanced range. price has broken this neckline, we've taken liquidity, right? And this is happening in that 330 window, right? Magical timing. Once this fair value gap is tapped into and we take liquidity, what happens next, right? Order flow becomes established, right? How do we know that? Because the true order block forms, clears that low, and then price just responds to the fair value gap, right? So if you miss this entry, you could literally take this one, with stops above that high, and then targets, right? Remember the discounted objective is this daily fair value gap. So you could be targeting this here. But of course, you would take profit at this low. Remember this low that left equal lows? You would take profit there. And of course down here, and then you could ultimately hang on to the lower prices at the discounted objective. If we use fib extension for targets, here's that 62. The 62, remember, we use the extensions with liquidity pools. So 62 aligns with where these equal lows are here. This low all the way over, sting it out. And then the full price swing doesn't really align with anything. And then let's see if we get, let me add 2 on here. Okay, so you could take this level here, which aligns with this liquidity pool right here, as an overall target. Okay, so that's that. Let's come to a 5 minute. Alright, so that's Tuesday's price action. Then we push into Wednesday. Right. So Wednesday, right? Of course, there's a fair value gap left here. We know that price has engineered these equal highs. Those equal highs are ran right at the Frankfurt opening, right? And then look what's formed here, a true order block, right? A series of up-close candles with a fair value gap inside of the range of those candles. And then what price does is it gets back inside of this fair value gap. Same thing over and over and over and over again. So we literally become short sellers here with stops above the high. And we should see price tank from here. Right, this is all just time distortion. Okay. So that area is ran, right? So now how do we respond to this particular trade? Now on this particular day, and let's see what time this happened. Right, this is, yeah. So I would have taken this trade all day long. But I think what we had to realize here is that, yeah, so we were trading from the very discounted portion of this overall range, from this high down to this low. So we at least want to be interacting as price reaches equilibrium, right? So once price reaches equilibrium here, right, which is no big deal, right? Maybe we took some off on that trade, maybe we didn't. But what would have kept us out of that, right, is, or our learning point would be that we were trading in the very deep discounts of this swing high to this swing low, right? This is the new dealing range. All right, so once price balances this completely, we anticipate a failure swing. So let's come down to the smaller time frame. And if we're seeing price balance that range, then we anticipate the failure swing, right? Which happens, we get it right here. And let's see if we find any reason for entry. One minute. Okay. At this point, the only thing that I see, on this right after getting the fair swing, is price engaging with this fair value gap here. But I think that I would probably want to see a little more than that, unless there's something in here that would tip us off. But I don't see that either. So let's see what else we get in price. All right. So once this low is taken, right, we see here's a sweep. So we don't get any entries from up here because if you want to take this and place a stop above that high because that the range was balanced, we've reached equilibrium, and we can let's see what that risk reward looks like. Right. So remember it's Tuesday, or it's Tuesday here, and we haven't completely balanced. This is where that daily fair value gap begins right here, right? So if you said, hey, I'm going to take these trades because I have a fair swing, and then you put a stop above there, what you would attack is this previous day's low, or even these equal lows, and that's a 1 to 2 trade scenario, right? Which I don't think is bad at all. Because you have the context behind this trade, right? You've just swept tons of buy side liquidity. You've reached the equilibrium portion of the range. You filled an imbalance completely, right? You anticipated a failure swing in what you got, right? What you would have liked to see is price run to the neckline or the failure point of that failure swing. But what you did get is price traded to 50% of this fair value gap, right? Because above here, there are no fair value gaps. So price technically does not need to come up to this area, right? We would just like to see it. Here's where the first fair value gap begins, from this high to this low. So price trades to it. And then we see price push lower for lower prices, right? So if we push to a 10-minute chart, boom. All right, this is what I want to see. All right, so these were my entries this past week. So I was for some reason I did enter a long position here, and I completely corrected myself after I looked and saw what was going on. And then I saw, here's a series of up close candles, right? There are fair value gaps inside of here before price leaves this range, right? Here's a fair value gap created. So what is price going to do? Price is going to trade back to that fair value gap right here, right? So as soon as I saw this, I took short entries from right here, right? So that's where you guys saw the pinpoint entry. And honestly, it would come from here. Stops are above this high, and then we should be targeting here and here, right? You see the equal lows on the lower time frame right here, and then we actually reach that level. You can see price come up and engage with this candle again, reach that level, and then now, right? Okay, so daily fair value gap is balanced completely, right? So now what do we anticipate? Right, a fair swing. So now, oh shit. All right, cool. So these were the shorts that we took, right? 1 to 2. As soon as we get this balance completely, then what you expect is a failure swing, right? So here is boom, and then boom, right? This is a failure swing. So let's look at a 10-minute chart. So you would trade this fair value gap, or you could even trade this fair value gap, right? But what's key is that you place stops up under. Let's say if you trade this one, you should be placing stops under here, right? Or if you were lucky enough to trade this one, stops would go into here, right? And then you should be targeting this high. And ultimately, right, since the discounted the overall range, since that objective is met, you should ultimately be targeting this particular area up here, right? So that is Wednesday, and then this brings us into Thursday's trading, right? And then we understand that this low should be protected, right? And from a fractal standpoint, we are still expecting or anticipating failure swings. So this is the failure swing from a fractal standpoint. Let's look at the daily because it'll give us a better image of that. Balance completely. The next day, a failure swing, right? We failed to run below the previous day's low. Why? Because the range is balanced completely. So, actually, let me point this out. Erase. Okay. So on this day, right, I was telling you guys that we should see bearish prices early in the London session. I thought I would be able to get up and trade London session, but I didn't. But here's the price delivery cycle, right? Here's your consolidation, right? Price technically is not going anywhere. We're just engineering liquidity. So here's your consolidation, expansion, reversal, retracement, reversal, right? Consolidation, expansion, reversal, right? Remember that price will go back into consolidation. So here's the fractals inside of, or the fractal price delivery models inside of an overall price delivery model, right? Here's price going into a consolidation, expansion, reversal, retracement, reversal, right? Consolidation, expansion, reversal, right? Retracement, reversal, right? So what I was anticipating and what I saw was consolidation. I saw the expansion right lower to take previous day's liquidity to fuel these higher prices, right? They left this previous day's high only so that London session can sweep it, and as soon as that high is taken and we see price clear this candle, right? Series of up close candles, and then here's the fair value gap, right? Price trades right to the fair value gap, and then we go short back down here. This low here should not be taken, right? And ultimately this low, but this low shouldn't be taken either, right? Here's that short term low, right? Intermediate term low, what forms on the side of intermediate term low, be short term low, boom. Okay. So if we study this price area on the 1 minute chart, and this was aligned perfectly with I want to say 2 standard deviations. Yeah, price pushed exactly 2 standard deviations of the Asian range down to this level here, right? Completely filled in this imbalance, and I'll show you the standard deviations here. Right, see that? Right to 2 standard deviations of the Asian range. Bingo. It aligns with a 1 minute fair value gap. Okay. But anyways, if we go back here, so once that, remember this area is fair value gap that gets balanced, what you expect is a fair swing, right? If if we're anticipating that, we're just looking for any reason to go bullish, right? Most people would be needing to wait for all of this to be ran, but we don't necessarily need to wait on that. What you should see is that buy side liquidity is being engineered, but what's key about this is that this area here balances it. This is our failure swing. Here's the neckline of a failure swing, and then here's the fair value gap. So here's the order block, right? Once price clears that high, it solidifies the order block. And then what you want to do as a trader is come in and say, where's the fair value gap? Here's the fair value gap. You trade that fair value gap, and then you should be targeting this high, right? Equal highs right here. Equal highs, right? So this was my trade on Thursday. And I was able to hold it for, I want to say 100 plus pips. Stops went right up under this low. So I did not catch the shorts on London from London, but this would have been an awesome day. Stops there. I probably would have taken profit at this order block because you don't necessarily know that price is going to run down there. There's no way to know that. The only thing you can do is use fib extensions to gauge where price might go. So let's see. Here and then here. Yeah. So it's this complete swing with almost in line with this. But you can see reaction at 62%, and then once we get here, that's when price turns around. So the longs from here with stops here. First target would be these equal highs. That's a 1 to 4, and then we actually run So I want to say, I think I pulled out of this trade like right here, like right at 1 to 10. Yeah, once this high was taken, that's when I pulled out. And then we come to Friday. I didn't really engage with the euro on Friday. Other than there's some shorts I'm getting ready to show you guys, but I ended up closing them out. I'm not sure why. But now that I look at this, right, same scenario, right? What's what you guys should be seeing is this, right? Here's the previous day's high. That gets ran, right? Previous day's high is ran. What we expect is to see price reprice to some type of sell side liquidity or discounted objective, right? And discounted objectives are typically fair value gaps. All right, so we have equal lows in here. So this would be a sell side liquidity pool, an obvious sell side liquidity pool, and then the same thing that I've been showing you guys this whole time is this, right? All right, so you got a failure swing here, right? High taken, failure swing. Here's your order block, right? Why is this considered an order block? Because it's a series of up close candles before a down move, and it has what? This is the magic sauce, the fair value gap, right? What does price trade to? The fair value gap. Right inside the fair value gap, stops would go above here. First TP would be there, right? Or you could trade it down to this original consolidation. I would most definitely take a 1-to-1 trade scenario. You could say that since all of this is balanced, that you don't, that you would be a little more aggressive and place stops here, but I prefer to place mine above the overall high. So price takes this, and then I want you guys to watch. Right, remember our stops are still up here. This level is taken. You will still be holding on to the trade. And then what I want you guys to see is 15-minute chart. Oh shit. Okay. All right. Let's stop right here. All right. So this, I want to. Is it DXY or is it? I want to show you guys why this, and I'm gonna explain this trade in here. Somebody in the group actually took this trade. I did not take this trade. I honestly just didn't see it, so it was a good eye by him. But what one should have saw is this here. So let's compare. Put up the highs. Yeah. All right. So on the DXY, this high, and I'm gonna even show you guys the pound also. So on the DXY, this high, which is relative to this low on EU, is taken, right? That high is taken. Okay. On EU, this low remains intact, right? So what that lets us know is that S&T divergence, right? Once we get that, we start looking for a reason to buy, right? We're also, we're already behind a bullish premises, and so we start looking for reasons to buy, right? Here's a slight fair value gap in here, right? Series of down close candles, price pushes up, leaves behind an imbalance from here to here, right? Price taps inside of it, right? This level also sweeps a sell side liquidity pool. Boom. And then let's zoom inside of that level and see how we could have engaged. Right? So sweep, drop down. We don't necessarily get a sweep, I don't think. Okay, yeah, we do. All right, so these lows, right? These lows here are swept. And then this range is balanced completely. So remember, once that happens, we expect a fair swing. Do we get a fair swing? Boom, right? Bingo. As soon as this is established, so this is sell side liquidity under this low. Once that is ran, price pushes up. Here's your order block. Here's your fair value gap inside of that order block, and price trades to the fair value gap. And then we get it. We see it never come back below that low. 3 minute. Same idea, right? Even this, right? Series of down closed candles. And then you can find imbalance inside of that range. But once this high is cleared, right, and you can kind of solidify this as reason to push price higher. Now, once price pushes higher, if we measure this range and we find OTE levels or optimal trade entry levels, once price pushes to 62%, which is also the right where true day opening is, then remember that this area, and let me actually show it to you. Okay. So price is pushing it to the fair value gap. You might say, why don't you take this fair value gap? Right? You could take that fair value gap, and you can monitor price at that fair value gap, but there's nothing that happens once price reaches that fair value gap. So what you do is you come here, see is a series of up-close candles formed in the midst of price reaching that fair value gap. As soon as that is cleared, you trade the fair value gap here, right? So this will be the order block that formed, and then you trade the fair value gap back down. Entries will be here, stops will be here, right? And then this is happening in that 11:30 window. This entry happens right at 10 a.m. Right, so you guys should be paying heavily close attention to time. And then we see price tank. I want to say it only comes to this fair value gap. Everything here is balanced, so it sweeps this low, I believe, and comes to this fair value gap. Right, remember that high is still protected, and now we turn around. Cool. Yeah, so we sweep this low here, and then we tap into this fair value gap. But even that trade, if we took profit right here, right, it's almost a 1 to 3. So you got a 1 to 3 here. We took shorts from above. Yeah, so that's that for EU, and then S&P. I'll probably make another video for S&P.